Stock market has been very volatile lately because of the times we live in. Still, we are getting rapid bear market rallies. Let's explore in this video what is going on in the stock market these days, possible reasons behind it. Do you think such bear market rallies in the stocks will sustain for long? And at the end, my perspective, if this is the good time to buy stocks for long-term investment horizon. Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic, bear market rally. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which will be highly appreciated. When the stock market drops more than 20% from its peak value, technically we have a bear market. It is absolutely normal for stock market to go from one extreme end of exuberance to other end of pessimism. In nutshell, it is based on the financials of the underlying asset and the human emotions behind investing, where the latter is often very unpredictable part of it, which varies from person to person. Both bull as well as bear markets are integral parts of stock markets around the world that leads to buying and selling opportunities for investors. That is why when markets overcorrect itself to the negative side, often small bear market rallies are common as investors try to buy the dip. Hope you get the idea. There are two major events going on these days. First is the central banks around the world sucking up extra liquidity while slowly jacking up interest rates, where the lead is being taken by the US Federal Reserve as they are trying to tame huge inflation here at home. In simple terms, times of cheap money is practically over. That is why stocks are reacting negatively. Second is the geopolitical situation in Europe, where Russia has invaded its next door neighbor Ukraine, resulting in a major war in Europe since Second World War. Some experts are predicting it is not going well for Russia as they hope for a quick victory, so chances are they can raise the stakes one notch up. Also, Russia being a huge exporter of oil, gas, and other natural resources, whereas Ukraine exports huge quantities of wheat, so there is bound to have long term supply shortages in the already constrained supply chains. All these factors are bad for stocks as uncertainty is rising with too many variables to account for. If you look at stock market history, going back to mean valuations is a very powerful force. Even after a 20% decline from its peak, Nasdaq has averaged a 6-month return of close to 9%, while other major US indices have also posted similar gains. Does that mean the negative cycle of monetary tightening as well as geopolitical tensions in Europe are over for stocks? I don't think so. In my limited wisdom, money tightening has just begun and we have got a long way to go until they are able to tame the rampant inflation in the economy, while the geopolitical tensions are very hard to predict. Therefore, expect some choppiness in the stock market at least for some time. Human emotions while investing plays a very important role in the world of investing. The golden rule is to take a calculated risk based on the financials at any given point of time and try to project those into the future so that you can calculate the expected rate of return of investment going forward. Now the factors that we have talked about earlier changes the whole calculation and brings uncertainty, thereby increasing the risk. Investing is all about managing the risk while increasing returns. If there is so much uncertainty and pessimism, then that risk is all over the place. Rightly so, nobody wants to put their hard earned money in harm's way, especially if the risk to reward ratio is not measurable and tolerable for their risk profile. No doubt there will be people who will try to buy the bottom, but how I see it, there are huge headwinds and uncertainty which no single investor or group of investors will be able to reverse. There will be some buying opportunities for extremely patient investors who understand the risk and reward while having an extremely long term view of the markets. As an example, Tesla at $780 a share on the day of recording looks very attractive buy to me based on their 50% growth year on year alongside competitive market domination two brand new plants coming on stream as we speak, and at the end, the vehicles are insulated from $100 barrel gas price. This can be considered as one of the options in the market with caution that there is no way to predict that it cannot go down even further. Don't forget another rule of investing: be fearful when everybody is greedy and be greedy when everybody is fearful. But that is me, I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.